let's say they revalue it to 4,000, or if they revalue it to 44,222, which is 100 times, that 11 billion becomes a trillion. If they revalue it to 8,400 and change, that would be 2 trillion, and so on. And some people argue it could be 15,000, 20,000. There is the big question, of course, of whether that 8,133.5 metric tons of gold is still in the U.S. Treasury depositories like Fort Knox. And I think the U.S. is actually bringing back a lot of gold home to the U.S. because a lot of that gold that the Treasury held was leased out to the bullion banks in order to keep the price of gold under control so it doesn't rise, because when the price of gold rises, the dollar goes down.
In recent gold and silver market, prices have shown volatility amid economic uncertainties and Federal Reserve policies. As of November 17, 2025, gold steadied after a sell-off, trading below $4,100 per ounce due to a stronger dollar and fading hopes for rate cuts, while awaiting key U.S. data. Silver is on track for its 5th consecutive structural deficit, with prices hitting record highs and exchange-traded product gains at their strongest since 2020. Both metals surged earlier amid geopolitical tensions, but plunged recently alongside AI stocks and Bitcoin on restrictive Fed rates. Innecco, a seasoned financial markets analyst affiliated with gold investment firms, shares his expertise on macroeconomics and precious metals. In this discussion, he analyzes Treasury Secretary Scott Bessent's optimistic comments on the U.S. economy, attributing his bullishness to a potential gold revaluation to $4,222 or even higher $8,400, similar to 1934, which could boost growth, real incomes, and address public debt without raising taxes, while warning of long-term debt risks and advocating for sound money. Let's watch clips from Innecco's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Well, we're going to look at Scott Bessent, the Treasury Secretary of the United States. He's recently made some interesting comments about the economy to Maria Bartiromo from Fox News. And I thought to myself, what does he know that we don't? He seems to be very bullish for the economy, not just for Wall Street, but Main Street as well. And I'm going to tell you why I think he is. And of course, it's speculation on my part. One thing he said that I thought was interesting, he said that they're bending the curve of prices lower. I guess he means they're getting rising prices under control. I'm not too sure about that. I think the CPI or CPI is still running near 3%. So, and I think we could see a second wave of inflation. But anyway, that's what he said about prices. And he sees an increase in real incomes in the first quarter and second quarter of 2026. He said as well, 2026 will be a great year for working Americans and for the markets. He called it parallel prosperity, where both Main Street and Wall Street do great. Well, it sounds really good. It could be a bit of propaganda. It could be wishful thinking. But I actually think there's a reason why he's so bullish, and that is gold revaluation, yes. And we're going to look at what happened to the economy and the markets in 1934 and 1935 because there's a major gold revaluation in January of 1934 with the Gold Reserve Act. I think it was January 30th to be exact. And the price of gold, which, well, the gold had, of course, been, most of it had been confiscated into the Treasury's coffers and from the American public through Executive Order 6102. And I suggest you Google that and look at that executive order. Basically, it was a de facto theft of Americans' gold or money by the U.S. Treasury. Yes, they redeemed, they gave you Federal Reserve notes in exchange, $20.67 for each ounce of gold, or just $20 for each, let's say, $20 gold piece, or $10 for each $10 gold piece, and so on. You were allowed, though, to keep up to $100 gold dollars. And we also had another couple of gold revaluations. They weren't as big and significant in 1972 and 73 by Richard Nixon. And in 72, it was from $35 to $38, and then they did it again the following year from 38 to 42.22. So looking here at GDP growth, 1970 was slightly negative, 71 was 4.37, and 72 and 73, the economy grew by 6.89% and 4.02% respectively. 1974, the economy shrunk by 1.95%, so it didn't really have as much an effect on the economy, mainly because Nixon closed the gold window because the U.S. was losing a lot of its gold. Yes, there is the big question, of course, of whether that 8,133.5 metric tons of gold is still in the U.S. Treasury depositories like Fort Knox, West Point, and Denver Airport. I think there's another one. And I think, though, that the U.S. is actually bringing back a lot of gold home to the U.S. because a lot of that gold that the Treasury held was leased out to the bullion banks to manage the price of gold over the last 30 years or so. I mean, you should check gata.org, gata.org. They've spoken about this policy of leasing gold out, the Treasury leasing gold via the bullion banks in order to keep the price of gold under control so it doesn't rise, because when the price of gold rises, the dollar goes down. Just like Roosevelt revalued gold from $20.67 to $35, that means the dollar goes down. And I think that's why Mr. Bessant seems to be so confident to go in front of the world and tell the world that the U.S. economy is doing well. Yeah, he said it will be, U.S. economy will likely substantially accelerate in Q1, Q2. Let's say they revalue it to 4,000, where we are right now. Let's see where we are. We are just below 4,100. Well, or if they revalue it to 44,222, which is 100 times, well, that 11 billion becomes $1 trillion. If they revalue it to 8,400 and change, that would be 2 trillion, and so on. And you get the picture. And that 2 trillion goes into the U.S. Treasury account at the Federal Reserve. The Federal Reserve has the gold certificates, and they would give the Treasury the difference from the new price to $42.22. That would be the profit. And some people argue it could be 15,000, 20,000, who knows. That, of course, would be massive. That's like you getting the windfall. You do loads of stuff. And even the Federal Reserve has published an article this year on August 1st talking about this kind of stuff. It's entitled Official Reserve Revaluations, the International Experience. But I'll read you the first paragraph. He says, with public debt at high levels, some governments have begun to explore financing additional expenditures without raising taxes, while also not increasing public debt outstanding. One possibility is using proceeds from valuation gains on gold reserves, as has been floated in the US and Belgium recently. For the U.S., this would involve revaluing the government's 261.5 million troy ounces in gold reserves, the largest gold reserves globally. Well, I'm not too sure about that. We're now seeing that even the mainstream press is saying that China might have a lot more. But anyway, from a statutory price of $42.22 per troy ounce to current market prices, which stand around $3,300. Well, that was almost $1,000 lower. So there you go. That's what I think. That's why I think Mr. Bessent is really positive about the economy. So do I think this is a good thing longer term? Could be. It could give the United States a big boost in the short term, and it could be a way for the U.S. to come back. But I really think one thing that the United States and the rest of the world need to get off is this appetite and appetite for a lot of debt. We need to get more into the real world. We need to have sound money, and hopefully it won't be wasted if this revaluation were to happen.
In conclusion, Treasury Secretary Scott Bessent's optimistic outlook on the U.S. economy, predicting accelerated growth and rising real incomes in 2026, may stem from a potential gold revaluation, akin to the 1934 Gold Reserve Act, by raising gold's official price from $42.22 per ounce to current market levels around $4,222 or even higher $8,400. The Treasury could unlock trillions in profits, fostering parallel prosperity for both Wall Street and Main Street, while addressing soaring public debt without tax hikes. However, while this could provide a short-term economic boost, Mario Innecco cautions against long-term risks, emphasizing the need to curb excessive debt and embrace sound money principles. Historical revaluations, like those in the 1970s, had mixed impacts, underscoring the importance of prudent management to avoid inflation waves. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.